Talk to us of just how important a certain few names of ultimately tech stocks have been to the rally so far this year.
Yeah, Caroline, we get a lot of inquiries from our clients about how much the market has gone up this year, and is this a good time to get into equities? And when you break it down, there are really two stock markets. There's the Super 7, the biggest tech and consumer companies like Amazon, Tesla, Microsoft, Apple, Google, obviously Nvidia, that have surged. On average, as of Friday's close, they were up 67% year to date, whereas the rest of the market was only up 0.3%. And that really does tie into two narratives. One, the growth opportunity related to AI on the one hand, and then the rest of the market, which is all about recession risks, interest rate risk, inflation risk, as we're seeing materialize today.
Let's dig deeper into the AI equation, because yes, Nvidia now back below that 1 trillion, but still basically what a surge. Are we putting too many eggs in just a very few baskets? Are you on the sort of Cathie Wood side of the equation that there are other companies that are going to win here and you should start looking at better valuations out there?
Yeah, Caroline, it's hard to tell how much we're going to get out of AI over the long term, but it's pretty clear that the companies that are enabling AI, whether it's through the chips like Nvidia provides, or whether it's the software and deployment like Amazon Web Services, Google, Microsoft, are enabling. What I think investors recognize is that even though we don't know all the details, we know that AI and its spread across the economy is going to provide years of growth for these companies. And that's a step change in what we expected these companies to be able to do, just some months ago. And so I think that that's warranted. It isn't to say that there aren't opportunities out there, and investors can look for those. But we think these are solidly in the middle of this, and it's a less risky way, I think, to play the AI move over time. And then you can look beyond that into companies adopting AI in industrials, in healthcare. There are plenty of opportunities out there. We'll learn more about them as time goes on.
JoAnne, Cathie Wood joined our programming, our colleagues in Asia overnight. She's moved her focus on from Nvidia, Tesla to the next big bet. Have a listen to what she had to say.
We are really happy that, investors who own benchmarks like the NASDAQ and QQQ still own Nvidia. They own it in some of our portfolios, but we're on to the next thing. Nvidia is a hardware stock, and sure, it has some software, but the history of hardware and software is the bigger beneficiary over time is going to be software.
Is going to be software. I think you note that investors are looking to move money into software, which can mean a broad range of things, right? Cloud, SaaS, enterprise. What are the corners of that subsector that interest you?
Oh, yeah, there are going to be many. I mean, the adoption of AI into software tools across multiple end markets, I think, is significant. We own a company, for example, called Splunk in our growth strategy. They are a big data analytics company, and AI is going to play an increasingly important role there. From NVIDIA's perspective, the tying of hardware to software is actually pretty critical to what they're enabling their customers to do. It's also why their gross margins are going up. And so, we see in hardware and software to be more and more tied over time, which I think is why Nvidia is such an interesting opportunity here. Not to say one should potentially take a little bit of profits at this time, which we did for clients actually after they reported. But going forward, yeah, there are going to be plenty of opportunities in software as well.
Yeah, Carrie, the point that I'd make as well is like this obsession with a small group of US domiciled names, right, the mega cap tech. But if you look at the commentary of the broader market, particularly the bond market, when we think about this economy and global inflation, everyone's got an eye on China.
And, well, Elon Musk is there at the moment, isn't he, as well, that you were just highlighting a bit earlier. I mean, JoAnne, to that point, how much, when you're looking in the macro, when you're looking at what's happening here in the US and everyone seeing the 7 winners, the rest leaving behind when we think about where inflation's at, how much are you looking for your investor base at, China, Europe being opportunities or being just areas you need to stay well away from at the moment?
There's always a role for international exposure in portfolios. We have actually separate international strategies in addition to some strategies owning some international names. China clearly has become more of a concern. I think investors are overly optimistic about how much the reopening will be able to drive demand in the near term, which isn't to say that China is not going to be a very important source of consumer demand. They have massively moved a big chunk of their population into the middle class. And that's going to be a foundation for buying over many, many years. So, overall, there are some attractive valuations. Our approach is to look for companies in countries as opposed to investing in countries as a whole. And that way we can hand select as we do in all of our strategies. Back to the hardware side, the advantage we're seeing that Ed mentioned, the focus on US, I think comes from the deep moats, right, that our companies have created around this technology. I was a semiconductor analyst for 10 years, and one of the key things there was digging into the technology advantage that companies like Nvidia and Google teaming up with Broadcom to develop an alternative big chip to be able to do these AI training computations. It shows that moat is very deep. It supports their margins. So I think it's not wrong for investors to recognize that the source, right, of a lot of the gains are going to be in these U.S. companies.
We learn that one morning a market does not make, but it is interesting that there's more emphasis right now on current risks, rates, recession. How much is that going to impact the technology sector going forward, do you think, from this moment right now?
Yeah, great thought there, Ed. As I said, we have two stock markets right now. We have the investor focus on which companies out there can actually provide years of growth with or without a recession, right? That secular growth, and now it's been revealed in AI that's going to be significant. And then you have the rest of the market, Ed, and I think that's the market where they're going to be really focused on those recession risks, and rightly so, right? The JOLTS data this morning suggests that the Fed's going to have to raise rates again instead of pausing, and it really throws into doubt the Fed being able to cut rates towards the end of the year. And that makes investors worry that those higher rates are going to constrain lending. That's actually going to trigger a recession. The Fed obviously would like to avoid that. So there's just a massive amount of uncertainty right now, and we're seeing it in the prices of stocks in the rest of the market where secular growth isn't as big a driver, where the cyclical concerns are far more important. But the patient investor should really look beyond this. Equities do a terrific job over the long term of delivering the ability to build wealth. So it's an opportunity potentially to get some of those companies in the rest of the market and build those positions now while risks are high. And if you're a long-term investor, you can look beyond that and build really solid, diversified portfolios.
And take profit in the 7 names that have driven us thus far?
We've done some of that, absolutely. We're actually slightly now underweight Nvidia. We've been overweight for the last year. And I think it's appropriate to make sure that the risk exposure you have in a portfolio is balanced against, how the potential return from here is now confronting the level of risk that we see, across the global economy.